Hey guys, welcome back to the channel, and today we're going to be reacting to
How Paris dethroned London as Europe's money hub.
Paris
100 billion
dethroned
pounds.
London?
This is the cost of
Yeah.
London's fading dominance as Europe's
Ooh.
financial capital. A staggering sum that you can see in this chart by Morningstar. That's right, almost 100 billion pounds yanked out of the market, and it's not just a number on a chart. It's a warning sign. London, once the undisputed financial powerhouse of Europe, is losing its crown. For decades, London reigned supreme as Europe's financial.
I would think Brexit didn't help too. You know, now Europe,
Mm-hmm.
well, EU particularly, if they were like, investing in London as part of the EU economy, now they're like, okay,
Mm-hmm.
they're no longer part of it here, so have to find our own hub.
So when they exit,
hmm
can people still travel to London,
I think so.
UK,
Yeah, I think so.
without needing like additional paperwork?
I don't know. I don't think they made it complicated for people. Like if you just travel to visit, I think it's okay. If you want to live now, has become more complicated. But I think to just like visit to say what's up, I think that's still
Mm-hmm.
pretty easy.
Capital, a global powerhouse where money flowed, markets thrived, and investors felt secure. But today, something has changed. Major firms are pulling out, investment is drying up, and confidence in the city is fading. The financial
That's not
markets are
good
shifting,
because
and
London carries the whole country.
UK.
Yeah, whole
Mm-hmm.
country.
London's grip on its historic dominance is slipping. But why? What's really driving this exodus? And more importantly, who stands to gain? Let's break it all down.
Mm.
For decades, London reigned supreme as Europe's financial capital, a powerhouse of banking, trading, and investments where money never slept and deals worth billions were sealed daily. But that dominance, it's slipping. And the turning point? Brexit. The 2016 referendum sent shockwaves through the financial sector, and the aftermath has been brutal. Banks, investors, and asset managers faced a harsh reality.
I'm still surprised how no one saw this coming though. Like
Like, how can they see this coming?
that there would be serious like economic implications. Like
Mm-hmm. It's to me, it's the same thing for here in the US when Trump became president. Like people are shocked that he's deporting people, and the people who are being deported are the ones who
No,
voted.
no, this is a great example. So I would say the same thing. How did nobody saw this coming? Like
Mm-hmm.
it was so obvious.
Mm-hmm.
Like same with the Brexit. It was. I mean, I'm not gonna sit here and say, oh, it was obvious to me because I'm not like I wasn't involved at the time, So I
Mm-hmm.
know, but like looking right now, like these are pretty predictable things. Like obviously
Mm-hmm.
we can't predict every detail, but
Yeah.
like that there would be economic fallout for leaving a union.
It seems like a lot of people have regret. Because remember we saw
I
they say if they
with
were vote,
Brexit.
yeah, if
Oh,
they would have voted differently.
I think with Brexit, a lot of people not. There's people. I think there is some things that people didn't see coming, which understand,
Mm-hmm.
but I think like economic fallout, that's a pretty obvious one.
Mm-hmm.
So I don't know how people didn't see that coming.
London was no longer inside the European Union, and that meant no more automatic access to EU markets. In other words, business as usual, over. Let's talk numbers. Since Brexit, London has seen a staggering 1.3 trillion euros in assets shift to European financial hubs like Paris, Frankfurt, and Amsterdam. The workforce followed. Thousands of finance jobs, once rooted in the city, have relocated
Why are they using this filter like it was shot in the 80s?
Yeah.
across the continent. Major institutions like JP
It
Morgan,
doesn't help
Goldman
that the
Sachs, and
weather is muggy.
HSBC moved
Yeah.
significant portions of their operations elsewhere. It wasn't personal, it was survival. Here's the issue. The Brexit deal was all about trade in goods, but financial services almost entirely overlooked. There was no solid framework to keep London's financial firms seamlessly connected to European markets. And without that passporting system, which allowed UK-based firms to operate freely across the EU, the city lost its biggest advantage. The result? Europe's financial capitals didn't just pick up the slack, they capitalized on London's misstep. Amsterdam overtook London as Europe's biggest share trading hub, Frankfurt became the new banking stronghold, and Paris solidified itself as the go-to spot for asset management. The playing field was no
Mm-hmm.
longer tilted in London's favor. Brexit wasn't just a political rupture.
Also, I would say it's good for Europe that not one spot took it over, but they distributed it amongst three
Mm-hmm.
countries. I think that's actually really good for European Union as a
Mm-hmm.
whole.
It was
And
a
it seems like when it comes to France, they're about like making sure maintaining France first before others.
Mm-hmm. But Isn't that every country though?
No, I see that particularly with France because a lot of the policies, there was one that we did the other day where France always maintained to have a strong military,
Oh
even
yeah.
though
Hmm.
they were reliant on the US having coverage for that.
But they didn't fully trust
They
it. Yeah.
did fully trust it.
Financial earthquake. With assets and personnel relocating and no comprehensive financial agreements in place, London's grip on Europe's markets began to weaken. But while London struggled with uncertainty, other financial hubs seized the opportunity. So, which cities have gained the most from London's decline? Let's examine how Paris, Frankfurt, and even New York capitalized on this power
New
shift.
York, huh?
For years, London was untouchable. The undisputed financial capital of Europe, a city where trillions flowed through the markets, global banks set up shop, and deals shaped the world economy. But that grip on power? It's loosening fast. London's rivals, Paris, Frankfurt, and even New York, are seizing the moment. And if you need proof that London's dominance is fading, look no further than the European stock market. In 2022, Paris overtook London as Europe's largest stock market. That's right, the French capital now holds the crown with the combined value of its listed companies surpassing London for the first time. What happened? Well, Brexit played a major role. Without seamless access to EU markets, investors started looking elsewhere. A business-friendly push from the French government, including corporate tax cuts, and suddenly the city of London wasn't looking as attractive. But Paris isn't the only city on the rise. Over in Germany, Frankfurt is quietly cementing its status as Europe's new banking stronghold. Since Brexit, Deutsche Bank, JP Morgan, and Goldman Sachs have all expanded operations in the city. In fact, Frankfurt has become
Hmm.
the new home to over £800 billion in assets that left London. And here's where it gets worse for
Wow.
London. It's
Wow.
not just stocks and banking. Even in foreign exchange, FX trading, a market London once dominated, things are shifting. For years, London handled nearly half of the world's daily currency trades, but now
I'm
New
curious on
York is
what was London's intention for the separation. What was the, because something had to outweigh this cost, and I'm pretty sure they have a team of people, financial advisors to kind of weigh the risk. Here in the States, there was a team of advisors that advised Trump that his plan, his financial plan would not be beneficial, but he went against their advice, the economists.
Hmm.
So I'm curious if the similar pattern here as well.
I think they probably was more concerned about other stuff than the economy. I don't know.
What?
I don't
That
know.
that pays everything.
Maybe like immigration. They were getting tired of it. Like I think
Mm.
I don't know. Also, lobbying laws is different. Like the companies can lobby like how they do here. They can't just pay politicians.
Mm-hmm.
So if some rogue politician went on, oh yeah, pro Brexit, let's leave the EU, fuck the EU, and a lot of people believed it and voted for it. London
Mm.
didn't have as much political sway. Well, not by London, I mean the rich companies.
Mm.
They didn't have as much political sway to like, hold up, this is a bad decision, let's not do this. They
Mm.
just had to take it, then hope people don't vote for it. But if the regular population decided to vote for it, then. And
Mm.
also keep in mind, even like majority of London might have been against it, but the rural UK might have been for it.
Mm-hmm.
And
I
if,
think they benefit,
yeah,
and this is
so
like a way from them for them to make
yeah,
some money.
so if if the rural UK vote is majority of their country, then that's what you get.
Mm-hmm.
closing the gap. Why? The numbers don't lie. Since
Then it
Brexit,
may not be
foreign
a bad thing that they were dethroned. I think it created maybe a balance.
exchange FX trading activity in London has dropped while New York has gained ground. The US dollar strength, combined with tighter EU regulations on UK-based firms, has pushed more investors to trade out of Wall Street rather than the city. The message is clear. London's crown isn't just slipping, it's being claimed by its biggest rivals. Paris is now Europe's stock market leader, Frankfurt is the new banking hub, and New York is pulling in the FX trading volume. As London's rivals gained traction, global banks,
What year
financial
was
firms, and
this?
trading houses started
Brexit? Do you remember?
Brexit,
Mm-hmm.
2015 maybe ish,
2015.
around that time, yeah.
moving operations abroad. But the damage didn't stop there. Investors, once confident in London's markets, began pulling out, triggering massive equity fund outflows and loss of capital. With institutions shifting their asset allocations and corporations opting for US listings, the financial exodus from London accelerated. But why are investors losing faith in the city? Let's take a closer look on why capital is fleeing the city. London's financial dominance isn't just being challenged, it's bleeding capital. Investors are pulling their money out, corporations are choosing to list elsewhere, and the city is struggling to keep up with global markets. The numbers tell a brutal story. Billions of pounds in UK equities are vanishing from portfolios, with capital flowing instead into European and US markets. So what's driving this exodus? Let's break it down. For decades, institutional investors, pension funds, asset managers, and sovereign wealth funds have anchored their portfolios at UK stocks. But in recent years, their appetite for London listing equities have collapsed. In 1997, UK pension funds and insurance firms held over 50% of the UK stock market. Today, that figure has plummeted to less than 4%. That's not
Wow.
just a
That's a big
shift, that's a
Mhm.
complete abandonment. And it's not happening in a vacuum.
Wow.
Investors are choosing higher growth markets in the US and Europe, where returns are more attractive. The S&P 500, for example, has consistently outperformed the FTSE 100, making Wall Street a far more lucrative option. If you want a snapshot of investor sentiment, just look at the fund flow data. In 2023 alone, UK equity funds saw outflows of nearly £30 billion, a level of capital flight that speaks volumes. Why? Because the UK market is no longer seen as a place for strong returns. Growth stocks, the US does them better. Stable blue chip investments, European markets offer more security. As a result, global investors are reallocating their portfolios, shunning UK listed firms in favour of international opportunities. And then there's the elephant in the room: Brexit. The loss of frictionless trade and investment with the EU has made UK assets less attractive to international buyers. Without clear access to European markets, many investors simply see less reason to park their money in London. It's not just investors fleeing, it's corporations too. London has long been the go-to market for companies looking to go public, but that's changing. In recent years, major UK firms have chosen to list in the US instead. Take Arm Holdings, the UK's biggest tech company. Instead of launching an IPO on the London Stock Exchange, the semiconductor giant went straight to Wall Street. Why?
I'm trying to
Higher
think in top of my head, like a company that has a product from UK. Like, what are they producing?
Well, semiconductors. ARM. This one they
What is
just
that?
showing semiconductors. So they're showing there. Aside from that, the banks, HSBC, I think. We just saw it. That is a British
Mm-hmm.
bank. Where is you see HSBC? You see that one on the left?
Mm-hmm.
That's a
Oh,
British
that's British
bank.
brand?
Yeah, that's a British bank.
I didn't
Uh,
know that.
what like a British company that that's a good question. What they produce? I'm sure there is companies, duh, but I'm the top of Cadbury, but that's like America now. Uh, oh, Mini Cooper, cars.
Oh, that used to be really
Yeah,
popular.
Rolls Royce, Bentley, the cars
Mm.
they produce cars.
Is that, I wonder, high enough volume for them to be a big business? I don't know.
Aston Martin. Uh, they're not maybe high volume, but they're expensive as fuck. So that brings income.
valuations, better liquidity, and access to the world's largest pool of institutional investors. And it's not just Arm. CRH, the Irish construction giant, and Flutter Entertainment, the betting powerhouse, have both shifted their primary listings to the US. The message: London can no longer compete with the deep capital markets of New York.
What's up, Carl Nation? It's your number one
I
broker with the
mean,
best full
honestly,
service wealth
it's pretty
management skills
impressive
in
that
the
they could compete with New
Even
York
British firms
before.
that do go public in London struggle to attract interest. In 2023, London's IPO market raised just £1 billion, a fraction of what was raised in New York or even Paris. Investors simply aren't confident in UK-listed stocks, leading to lower valuations and weak demand. The bottom line? London is no longer the automatic choice. London's reputation as Europe's financial capital is fading, and if the trend continues, the city could find itself not just slipping, but sidelined in global finance. With capital leaving at an alarming rate, the UK government had no choice but to respond. Promises of regulatory overhauls and new economic policies were put forward in a bid to restore confidence in the market. Let's examine whether these reforms are enough to reverse the damage. London is slipping as Europe's financial capital, and the UK government knows it. In response, policymakers have rolled out a series of reforms aimed at revitalising the city and restoring its competitive edge. At the heart of the government's strategy is the Edinburgh Reforms, a package of over 30 financial measures designed to boost competitiveness. Announced in December 2022,
I wish
these
they
reforms
also did a zoom out to how this impacted UK, because the approach of this is so centered and focused only on London.
Yeah, I I agree. I would love to see how it impacts regular people more so than the just the the big corporations. I love to see more like how the population feel, how
Yeah.
how the regular folks'
To get a
pockets
better
gonna get
understanding.
affected. Yeah, because this if this is an issue only for the rich, then who cares? But if
Mhm.
it's an issue that affects everybody, then I'd like to learn more about that.
Reforms promise to cut red tape, modernise financial regulation, and attract investment back into the UK. However, many see these reforms as too little, too late.
But I don't know how you're gonna attract new investment if they already don't want to invest. They don't want because the whole if it's more complicated because of the Brexit, then you're gonna come back into the EU? Yeah, but are they gonna accept you?
The financial sector isn't convinced. Critics argue that the reforms lack urgency and fail to address London's deeper structural problems. While the Edinburgh reforms tweak regulations, they don't change the fundamental realities driving investors and corporations away. For example, easing banking rules might help financial institutions in the short term, but it doesn't address why IPOs are leaving for New York or why UK equity markets are struggling. Investors need confidence, and so far they're not buying into London's turnaround story. One of the biggest hurdles for London is its regulatory environment. While Brexit
Yeah, I just don't see a case for London will become the biggest one in Europe again. I think it's possible for them to bring it up a little bit to maybe like try to compete with Paris and other cities, but I don't see that it would go back. Somebody would leave Paris now for London. I just because something would have to happen like in France for them to
Yeah.
leave. That's how I see it. It's like because leaving it's not a choice you want to make. Like it's
Yeah.
something you forced to make. So
Yeah.
if two places are like kind of the same, you're not gonna leave. One has to be way 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 better than the others for you to leave.
was supposed to give the UK the freedom to set its own rules, financial firms still see more stability in the EU and the US. Paris, Frankfurt, and New
This
York
is
all
old.
offer clearer, more
No,
predictable
it's like
regulatory frameworks, while the UK's approach remains in flux.
5
The
hours
Edinburgh
ago.
reforms
Oh.
attempt to cut bureaucracy, but some argue they don't go far enough to make London truly competitive again. Another sticking point: taxes. The UK's corporate tax rate increased from 19% to 25% in 2023, making London less attractive compared to European rivals. Meanwhile, the government's
But American tax is 25% too, so I don't think that's an issue.
financial reforms don't include major tax incentives to lure businesses back. Compare this to Ireland's 12.5% corporate tax rate or the US's capital-friendly environment, and it's clear why many firms are choosing to set up elsewhere. London's cost of doing business is also rising.
I guess capital friendly environment in the sense that there's different taxes for different incomes is like ways to navigate the systems to don't pay any. I guess that's what he means. Because regular corporate tax, I believe, is about 25% as well.
Office space, compliance costs, and post-Brexit trade restrictions all add to the burden, pushing firms to shift operations to cities like Paris and Frankfurt. So, can government reforms save London? Maybe, but not without bolder action. Right now, the policies being introduced aren't reversing the outflow of capital, and they aren't stopping companies from listing elsewhere. Unless the UK government goes further and faster, offering real incentives,
H&M, I think, might be UK.
Oh yeah, that's right. You're
cutting
right.
costs and restoring investor confidence, London risks becoming a financial hub of the past rather than the future. Can government intervention truly restore London's standing, or has the financial world already moved on? Let's explore whether London can reclaim its position as a global financial powerhouse.
Meet the first of
Let's,
its
but I
kind.
don't see it happening.
Ninja Crispy Portable Cookie.
London has long been the undisputed financial capital of Europe, but today the city faces a defining moment. The question now is whether London can adapt and hold its ground, or if its golden era is truly over. There's no denying that London's financial status has taken a hit. The European Union is actively pushing for financial independence, reducing its reliance on the city. And while London remains a leader in foreign exchange trading, its dominance is eroding. Government efforts to reverse the decline have been met with skepticism. The Edinburgh reforms were supposed to be a game changer aimed at loosening regulations and making the UK more attractive to financial firms. But so far, they haven't been enough to stop the slide. Companies and investors need stability, clear policies, and competitive incentives. And right now, London isn't delivering on those fronts the way its rivals are. But here's the thing: London isn't out of the game just yet. The city still has unmatched financial expertise, a deep talent pool, and a legal system that businesses trust. It remains one of the world's leading financial centers, and despite the losses, it continues to handle an enormous volume of global transactions. London's foreign exchange market is still the largest in the world, and its asset management industries remain a heavy
Interesting. It's bigger than New York. That's interesting.
impressive.
I didn't know that. Wow.
weight. The question isn't whether London will remain relevant, it's whether it can maintain its place at the top. Some argue that the UK still has opportunities to reinvent itself. A more aggressive approach to tax incentives,
I would have
regulatory
thought the spending in New York would have been way higher
I
in
thought
the
so
city.
too. I thought so too.
flexibility and trade agreements could help bring investors back. There is also the fintech revolution. London has been a hub of financial technology startups, and if the government plays its cards right, it could position the city as a leader in this sector. But the clock is ticking. Global markets move fast, and if London doesn't adapt quickly, its competitors could continue to pull
Barclays
ahead.
also.
The reality
British.
is that the financial world
We're at
doesn't
the
stand still.
Barclays.
Cities like New York, Paris, and Frankfurt aren't just benefiting from London's losses, they're actively working to secure their own futures. London, on the other hand, is stuck between holding on to the past
What's
and
the
figuring
city
out
on the other, all the way to the left?
All the way to the left.
Mm-hmm.
New
Because
York.
I thought New York is the
Oh
like,
no, then
statue
Frankfurt,
of-
I guess.
Oh, okay.
its next move. If the UK government continues to rely on small reforms rather than bold action, London's financial dominance may never fully recover. So is London's best era behind it? That depends on what happens next. If policymakers and financial leaders
curious of the
recognize the
comments.
urgency of the situation,
What
the
the
city
people have to
still
say.
has a fighting chance. But if things continue at their current pace, London risks becoming a shadow.
Well, let's see the comments.
Mm-hmm.
UK forgot their most profitable financial sector was largely due to being a gateway to the EU. I believe your US map shows the state of New York rather than the city. I believe you are referring to. Oh. It's not London today, it's called Londonistan. Oh, a little xenophobic.
Oh. And that's when we leave the chat.
Mm.
Guys, don't forget to like, comment, and subscribe. Join the Discord. And as always, share as much kindness as possible.